Welcome to How to Money with Cole and Cole.
I'm Cole.
And I'm Cole.
We coach people every day on their money and how to plan for the future.
As financial advisors, we're here to have an honest conversation on investing, retirement, and everything in between.
At Full Swing Financial Planning, we're here to empower you to take control of your plan, your way, for your financial future.
So let's talk money.
And sports.
Welcome back to How to Money with Cole and Cole. I am your host, Bailey Ashbrook, and we have a special guest today, President of Kingsgate Insurance, Ryan Smith. Welcome.
Thank you. Appreciate you having me.
I'm going to ask you a question right off the bat. You weren't ready. Because we were talking a little bit off air for a while. Do you think your dream, like Cole and Cole, is to just talk sports on a podcast every day, all day? Because you were pretty into the sports talk.
Yeah, certainly. I think it's always a fun topic. I grew up around sports. You know, my family's pretty passionate about them. You know, even this last week, I think my wife was giving me a hard time because it was homecoming. So obviously, you know, kids had a lot of stuff going on. A lot of pictures that need to be taken and all that, and of course, it was kind of falling like right in the middle. Which at the end of the day, let's make sure my staff hears that.
Side joke for the listeners. We'll tell you about that later.
You know, I probably could have missed some of the Ohio State game, but
you didn't.
There was definitely a lot of running around to make that happen, just because we typically watch them together with my side of the family, you know, my sister, brother-in-law, my mom and dad, everybody, nieces, nephews, you know, you name it. So
hopefully you missed some of the second half.
Yeah. I did catch most of the first half. I had to duck away for a little bit. Maybe that's why they did bad, you know, as I wasn't there to watch them. So
you're one of those fans that believe like the way you do your
probably
life
a little bit of
impacts
a little
team.
bit of superstition, maybe.
Yeah. My
Ryan was also the 1997 varsity Fort Dodge Dodgers starting quarterback. I bet you guys didn't.
I did not know that.
Actually, it was prior. I graduated in 97.
Oh, I'm sorry, 1996.
It was 90,
fall of 96.
It was 95 and 96. And a funny story about that, not to belabor sports here, but
I was 4 years old cheering you on.
That's all they want to talk about. That's all these guys want to talk about.
Is, you know, an educator at my son's school was talking to him about something, and he wrote on a piece of paper 1994, you know, and he was kind of asking him what that meant. And he says, well, that's the last time the Dodgers won a playoff game. And he was telling me this, you know, this interaction that he had with him. And at the end of it, just kind of joking around with my son, I said, well, was that a veiled shot at me? Because like ultimately, like, you know, they won a playoff game that I get plugged in there, and we obviously didn't win any. So
did you have a winning season?
You know, I'm gonna plead the fifth. I'm gonna plead the fifth on that.
We'll change the subject.
Future's bright.
There was a pretty good quarterback that played before me, so it was a pretty tough act to follow.
Are you a lefty or a righty?
I'm a lefty.
Oh, let's go lefty power on the couch today, guys. All right, well, let's talk a little sports then.
Yeah.
Baseball's about it, right?
Yeah.
That's you know, there's Ryan's a Royals fan, so they're in the playoffs.
Yeah, I've been with those guys for a long time.
They've had some rough years, but that they're playing well. 1-1 with the Yankees, heading back to Kansas City. That should be a interesting series. See how that all plays out.
Yeah, for sure. It was a pretty exciting game last night. I got to admit, I ducked away a little early last week to watch them play at 3:00 against Baltimore. Those two games that luckily they went 2-0. Yeah, it doesn't come around very often. Maybe about twice every 40 years.
So I pinned it correctly.
Hey, I feel your pain as a Cubs fan.
Yes, yeah, you know exactly what it's like.
Yeah.
Other than that, not much going on.
The Cyclones,
Cyclones undefeated, unexpected. There, the Hawkeyes are, you know, about probably where you thought they'd be.
Cyclones, if they win this weekend, will be 6-0 for the first time since 1938 in their football team. That's kind of crazy.
That's crazy.
Yeah, when you get into the
That's high
Iowa,
stakes for
you know,
them
the
this week.
Hawkeye Cyclone debate, sometimes you start throwing out stats like that. It's like, ooh, that's hard to
hope they
defend
win
a little bit.
Yeah.
I hope they have a great season.
Yeah.
I cheer for both Iowa and Iowa State. You and I, all the Iowa teams. I hope Iowa State has a great season. Since I don't think Iowa is going to have a great season, their schedule is just too tough.
We got a couple UNI grads right in the room.
Yeah.
Ryan? Yeah.
Panthers.
Yeah.
I'm one.
Let's go. Well,
and the NFL,
yeah.
the Steelers are stumbling a little bit.
The
My
Cowboys
Broncos are on their way up, 3 in a row.
they?
Yeah.
How about Riley Moss with his first career pick?
I didn't know
on
that.
Sunday. Yep.
wow, look at you.
He's
You know
he's making history in a lot of ways. So pretty
Who's
excited.
your NFL team?
I'm a Bears fan.
Oh, they're looking on the way up too.
Surging a little bit.
The Bears.
There's a lot of surprises in the NFL. The Commanders are 4-1.
Jaden Daniels.
Yeah, they're looking good.
How are
The
those
Bears are looking
Chiefs
good.
doing?
Chiefs are undefeated. They won again last
I'm
night.
ready to watch them
Last
lose.
year we picked who was going to win the Super Bowl, and I won. So I picked again. So we'll see.
She picked the Chiefs again.
Oh, yeah. Three-peat. I'm telling you.
That's really going out on a limb.
No.
Yeah, I know.
Okay.
It's like, I know. That's how I go.
We'll clip back to this one too. I know how this goes.
We'll make a reel out of this.
Yeah. So, well, thank you very much, Ryan. I know your time's really important, but for anyone who doesn't know, Ryan is the president of Kingsgate Insurance. So why don't you tell us what is Kingsgate Insurance? What do you guys do? How do you serve the community, and how'd you get started?
Yeah. So Kingsgate is an insurance and risk management firm, founded in 1990. Really what we do today is, we were chatting a little bit before we hit record, but, we're heavily focused on solutions for commercial clients, business insurance, what people would refer to as business insurance, liability, workers' comp, et cetera. We also provide group benefit solutions for those clients. But we also do, I would say in a community like Fort Dodge, we're going to be a bit of a generalist as well. So we can do a lot of different things, personal, home, and auto, and serve a lot of different types of business. I'd say over the years, it's evolved to, where we're, pretty heavily focused on the construction, transportation side of things. But certainly, I'll kind of talk about this a little bit as I give a little bit of background on the business, but we still got some ties back to like our agricultural roots, and that's a part of what we do, and I think will always be a part of our DNA.
And your parents started this business back in 1990, correct?
That's right. So
so you evolved into the president. Tell us a little bit about how that, you graduated college at UNI, go Panthers, and then you came back basically to Fort Dodge kind of right away and got into the business and have started to take it over and have become the president. Tell us a little bit about that.
Yeah, so I'll kind of maybe, if you guys are cool with it, I'll start a little bit from the beginning, just kind of coming to Fort Dodge. I wasn't born and raised in Fort Dodge. I pretty much lived here my whole life, but my dad originally, coming out of college, that's where he met my mom at Northwest Missouri State. And she's from Cedar Rapids originally, and he's from Southwest Iowa. But he started his career in Wisconsin for a company that was on the agricultural side. That's what he's going to do. He comes from a family of farmers. So he goes out to Wisconsin, he's carving out a pretty good career over there, has my sister and then has me. And then I'm about 6 months old and he gets a wild hair, kind of the entrepreneurial thing, right? Decides that he wants to leave Wisconsin, this great career that he's built. I think they had actually just built a home even, so naturally uprooting my mom when I think he'd probably put her through a little bit, some challenges when they first went out there, goes back to his home, where he grew up in Southwest Iowa, and doesn't jump into the family farm. He kind of breaks out on his own. He partners up a little bit with a brother-in-law of his. And naturally, as you can imagine, late 70s, early 80s, not the best time to jump into that business.
Tough time in farming.
Yeah, interest rates explode, all these other things. And naturally, I think that came to a premature end, not something that he wanted to do, but obviously kind of was forced to do. And, a funny story is, it literally was like a flip of a coin that landed us here in Fort Dodge. He had actually flown out to Harrisburg, Pennsylvania.
Oh, wow. And
got to be a finalist for a job out there, and, was about to accept that. And then that opportunity kind of fell through. It sounded like the guy that, was leaving and they were looking to replace ended up staying. And so the position ended up closing out, and that landed him with a job at with a company called Farmers National. I don't know if any of you have heard of them, but they're involved in farm real estate and
farm management.
Farm management. Yep. And so he got a job up here in 86. And, we followed up once we got out of school, late 86, got up here summer 87. And after several years of doing a pretty good job there too, it seems like maybe he has an allergic reaction to success or something.
Once he gets kind of
he gets a little too comfortable
because I'm like, I need something else to do.
Yeah, because I'll never forget he won a trip for us to go to Disney World when we were kids.
You're like, yes, this is it.
So it's like, oh,
and then he leaves.
Dad must be doing all right. But then they approached him in the 1990, early 1990, that they wanted their employees to get out there and sell insurance, farm, property, liability, crop insurance. And, my dad, got this wild, idea that, well, I'm the one with the relationships. Why don't I just start my own insurance agency? In hindsight, probably not the smartest thing. Most people, when they get into the property and casualty business, they're acquiring a book of business and that sort of thing. Mm-hmm. He opened the doors, hung his shingle without a single policy holder.
Wow.
And, got out there and started hustling. And, it was pretty lean for a long time. So in the beginning, they were called Ag Business Associates. And and interestingly enough, they started in the Boston Center just down here. And so he did that for a while.
No Disney trips during that time.
No Disney trips during that period of time. No trips.
Who was the first employee besides Ed?
So my mom.
Yeah, okay.
Right?
That's what I thought.
So
I figured.
So it was my mom and dad. They were a tandem there, and kind of got things rolling. And he only had one contract, so that's another big thing in our line of work. Particularly property and casualty insurance, is you got to have markets, right? You got to have the carrier partners to be able to place business and that sort of thing. He had one contract with a company called Iowa Mutual, and they had a caveat that they said you can't write any business in the city limits of Fort Dodge.
Oh, geez.
Because which was okay with him because he wanted to focus on that farm clientele.
Okay.
Interestingly enough, shortly, thereafter, they got out of the farm business. But luckily before that, he did acquire a small agency that was a part of what we would kind of label an aggregator. And that allowed him to gain access to more markets. So that was I would kind of call that the first, catalyst, of the evolution of what is now Kingsgate. Cause like I mentioned, it was Ag Business Associates before. And then, in the mid 90s, he moved from the downtown from the Boston Center out to the Kingsgate Center. And I know Cole knows this story, but back then my dad had read somewhere in a book about, a marketing book about naming your business after your location so your customers can find you. And so he grabbed Kingsgate Insurance, and
that's been what it's been since.
It's been what it's since.
And the Kingsgate Center is still there, but you guys have since moved locations and have a nice building downtown. So
yeah, for sure.
So when he moved from downtown and opened Kings, did it change? The business change at that point, or did he just change the name because he wanted to change the name?
Well, I think the business changed in the sense that there was more visibility.
And it was more an agriculture name only, right?
Yeah, so it probably probably narrowed you a little bit. Yep. You probably got back then, particularly too, the way people bought insurance and transacted business. It probably had more foot traffic, people coming in there versus being on the 4th floor of the Boston Center. But that was probably one of the first catalysts. Or I should say another catalyst, like in the evolution of the business. And then in 2002, after graduating, I joined in January of 2002. So at that time, I would have been the 4th employee. It was my mom and dad, and they had a receptionist.
You must really like your parents, though, to come back and work with them. I love it. No, I'm serious. Like that, I think is also a hard pressure. It's almost like a pressure sometimes.
Or you didn't have anything else to do.
Well, I'm just kidding.
It's probably more of that.
Yeah.
Did you going through college? Did you know? Did you know that you were coming back to work for them or work with them?
Did you always want to take over?
No, not at all. Like, I didn't know much about the insurance business. I mean, I think, being in it now for 20 some years, there's always the jokes that no one plans to get into the insurance business. Interesting. It was interesting timing. So obviously I got a victory lap in at UNI, got the extra semester,
victory lap's good.
Yeah. With some buddies. So, if I'm being candid, I didn't really have a plan. And then also that semester, that fall semester of 2001, 9/11 happened, so that was kind of a big change. The job market shifted a little bit. I didn't have much of a plan at all. I like most people that grew up, like when Cole and I grew up, I think the one thing that we probably, one of the traits that I think a lot of people our age had is resourcefulness, like a kind of a feeling that like, hey, I'll figure things out.
I'll figure it out someday.
Yeah, so I had kind of planned on landing in Chicago and living with some friends, and I'm like, well, I'll just get a job there and kind of figure it out.
See where it goes.
But I come home for Thanksgiving, and my dad had a written job offer. and presented it to me, like on, Thanksgiving night, or maybe it was on Friday or something. We're watching some football and maybe having a few beers or something. And all of a sudden he gets serious and hands me a sheet of paper. And I'm like, well, what's this? And he says, well, it's a job offer. And I'm looking through it, and the pay was $200 a week. Okay. So he was getting me for, actually, before I came on this podcast, I was going to Google what minimum wage was. I was wondering if he broke any laws.
Coming back on you, Dad.
potentially with that
statute of limitations might come into play.
It probably passed. But he was going to provide me some room and board as well. And then the one thing that was in the offer that certainly at that time I was entirely too stupid to understand how valuable it was. but was the opportunity to earn equity in the business as we grew it. So a percentage of that growth, would be allocated back to what we estimated the value of the company to be, and then he would gift that stock to
great.
me. And so, like I said, looking at, the first thing you look at when you're a 20-something knucklehead is just like, $200 a week. What am I going to do with that?
That's not doing me any favors.
Yeah, not realizing. But then, and I didn't accept it. Yeah. Obviously, I had to play hardball a little bit.
Here's my counter, Dad.
Negotiate.
So went back to you and I for those last couple of weeks, and I'm sure took it really serious. And then when it was done, came back and told him, that I was willing to take a swing at it. You said something a moment ago, Bailey. Yeah, I mean, I know Cole. Well, both you guys know my dad, he's probably one of the easiest going guys. Certainly wasn't like that, in my teens, but he was definitely.
You appreciate it now.
Yeah, but he's as agreeable of a guy, easy to work with. We are a good counterbalance. He's I can be impulsive. I can be one that just wants to make decisions really quick and want to have things move fast. And he's a nice counterbalance to that. Where he can kind of sit in and be, hey, let's maybe slow down a little bit. Let's think about this. He's a little bit.
It's a great way to. I know you guys both pretty well, and that'd be a great way to describe you guys of how you guys are, especially in business.
Yeah, and I certainly don't want to shortchange my mom because she's incredibly organized, very detail oriented, and I don't think my dad could have started the business without her by his side, kind of doing some of those things that are necessary behind the scenes for somebody to go out and actually produce business and do that sort of stuff. And on top of it, to do it for free. So, the two of them made a pretty good team and got things going, and pretty humble beginnings. So
I was going to say, that's what you envision when you hear family business startup. Like, that's a story. You're like, yes, like starting from nothing, coming here, having no book, no connections on that side. And then mom and pa just say, hey, let's do it. Let's bet on ourselves. Let's bring our 20-year-old knucklehead son in. And now he's president. So how did that evolve? Like, how did you go from, yes, I'll give it a shot at this, Dad, to now I'm president and running it? And how they evolved? Because now you have over 18 employees, I think, plus you guys have a beautiful new building. You guys are all over the state. You guys are very successful. Tell us the story. Like, how'd you go from giving it a shot to here?
Yeah, I would say, it wasn't a fast process. I kind of joke around that I probably wasn't worth much for the first 7 years that I was working there. Probably, what I always kind of share with people is maybe being that thing that really kind of got us cooking, was once again, and one other element I think to any small business, that I think you can't ignore is there's oftentimes a lot of luck involved, right? You just look back at certain events.
Like, this happened and this kind of took us that direction because of that. Kind of a compounding effect.
100%, So, I mean, I there's a handful of those things along the way that I look at and I think, well, maybe we were in the right position, to have that good luck happen. But I still kind of look at it, I'm like, man, we were just really lucky that worked out that way. And so, I don't know what drew me to it, but I know back in 2009, I got, I think it was like an email solicitation or maybe even a direct mailer or something that, going back to 2009, dating myself a little bit, that it probably was a direct mailer. And it was the hook. It was the hook that got me.
Something on there is like, I'm going to call this number.
Yeah, that looks really intriguing. But it was a seminar specifically about work comp. And it was an organization called the Institute of Work Comp Professionals. Coincidentally, not to bring a somber note to the podcast, based out of Asheville, North Carolina, and I remember I was trying to reach out to those guys last Friday, and thankfully they were okay. But man, what a and I'm sure we'll talk a little bit
crazy time down there.
About how that's kind of impacting the industry a little bit, events like that. But anyway, out of Asheville, North Carolina, great people. They had hosted an event down in Orlando, and I went down to that event, not really knowing what to expect, but just kind of the hook or whatever that they presented. It seemed like, well, this is kind of an interesting way to look at commercial insurance. And I go down there, and it was a real eye opener. It was about how employers can, one of the biggest things they say is that, employer or insurance companies don't pay workers' comp claims, employers do. And that's really true, because there's an element to it called experience rating, that as you have claims, that experience rate goes up, therefore driving your premiums up. And so ultimately, you're always paying back in arrears, the claims that you paid. But there's ways that you can really manage those. You can manage claims to ultimately positively impact that experience rate, very significantly too. So that whole thing kind of painted the picture of how you do that. Going back to the thing about luck. So when I went down there in 2009, what these guys were talking about was something called experience rating adjustment. And it wasn't active in Iowa. Okay. So it was a method that wasn't being deployed in Iowa. Iowa brought it in October of 2010. So here I was exposed to something that most other agents probably in the state of Iowa,
they were having to play catch up, or you were aware of the situation of how it was going to impact.
You got it. So they didn't know, like when that hit, a lot of folks probably didn't know really how it worked, what the impact of it was. And so, and I can honestly say that as we prospected business and used what we learned at that particular seminar, and we bought some software that could kind of help do some calculations and analysis a little bit simpler. That really opened doors for us. Now, all of a sudden we were talking about things that it wasn't, hey, let me get your insurance. Can I quote this or whatever? We're really talking about like solutions, like, hey, these are things that have happened in the past that are negatively impacting you today, but here's a path like, or a process that you can deploy that's ultimately going to help you drive these costs down. Like we can take control back. And actually back then, work comp was a line of insurance that was on the rise, much like property is today. So it was a very topical thing. So, kind of going back to that, just a real fortunate deal that it just came together at that time. I don't know what led me to that thing, what got me down there. And then I met a great group of agents that coincidentally fast forward about 8 years later, or actually fast forward about 9 years later, became, a conduit into an agency network now that's also a key part of our growth strategy and everything else. So
funny how it's all intertwined at some point and came back to that.
Yeah. We actually, I think you might've mentioned this, Bailey, but we were recognized as part of that agency group. It's called Keystone Insurers Group. But it's an agency network that we're a member of. There's about 370 agencies across the country. And we were the Iowa State Agency of the Year for the second year in a row. Funny story about that. When we were at the dinner, this was just last month in Columbus, Ohio. When we were at the dinner, the guy that happened to sit at my table was one of the guys from that 2009 meeting, because you have to be referred in. And I asked him, around 2017 when they were considering coming into Iowa, Keystone Insurance Group, I'd reached out to this gentleman, Jordan Clark. He's out of Kentucky. And I'd gotten to know him a little bit. And I said, hey, would you mind being, kind of my referrer into the network? And he's like, yeah, no problem. Got that done, obviously thanked him and stuff. And then, kind of lost contact. He kind of slowed down. He's a little bit older than me. I think he was kind of retiring and that sort of thing, but he was brought back at that dinner and we happened to be at the same table. So it was
full
great.
Circle moment.
Yeah. Just getting the opportunity to see him, thank him again, like, hey, none of this really would have been possible without your involvement too. So it's cool sometimes when those things come together.
I think, a lot of our clientele base and listeners are business owners. They are trying to develop a team. I have firsthand experience with your team. You have a great team. So talk a little bit about maybe the leadership of your organization or just, your staff, things that you think, you guys have done really well to help you catapult the growth.
Yeah. So, first and foremost, I'd probably speak of Donovan Day. He's been with us. I'm terrible about remembering years.
Long time.
Been with us a long time. And once again, that was a little bit of luck too, how we kind of our paths crossed, but, he quickly, he's one of those guys that, once again, I think a really good counterbalance to me. I would compare him a lot more to Ed, although Ed's a lot more empathetic than Donovan. Yeah. I'll say that.
I agree.
But Donovan's a very analytical guy. He's very thoughtful. And so he's a nice counterbalance sometimes to, my go kind of mentality about things. But he's really developed into a tremendous leader for us. He wears a lot of hats. He's a tremendous insurance professional, just with his knowledge of, coverage forms and the industry, particularly like what we've tried to do over the last few years is really kind of silo out, expertise, right? So going back earlier to being, you got to be a generalist in a community like Fort Dodge, but, even with, maybe talking to different types of businesses, it's good to have somebody that really understands maybe the property market, somebody that really understands like, kind of more of a new frontier, cyber coverage, that sort of thing. And so he's taken the lead on some of those. He also, right now is, kind of in charge of a lot of the HR things over at Kingsgate. But then from, on the service team, we've got great people like, we're really focused on trying to grow our group benefits department. Chloe McClineman, formerly Chloe Elsbecker.
She's awesome.
She's tremendous. She's been a great member of our team, and has really kind of taken ownership in what we're trying to do there, which is, we're focused on what we kind of refer to as being the anti-BUCA. The BUCA being Blue Cross, United, Cigna. The big health insurers. Trying to find solutions that gets employers and their employees kind of out of that rat race of, 20-30% increases year over year, where the only solution is let's raise deductibles and do that sort of stuff. There's a better way of doing things if you are willing to maybe look at, buying stuff on an a la carte basis versus a bundled service from Blue Cross Blue Shield. And Chloe has just been tremendous and, diving into that, taking ownership in it. So a lot of good things happening there. Chelsea Hetherington, is, the leader of our personal lines and ag team. So she's kind of been working really close with Ed on the ag side. She kind of came up through the personal lines team. And then one thing I'll say about both of those people, and also all three actually, including Donovan, is they're really kind of homegrown talent. Like they jumped into the organization with no prior insurance experience and, have just really became like, I would just say, constant students of the game, right? Just, focused on trying to get better and find new ways to provide solutions to customers. And then, on the commercial side, kind of our boots on the ground leader, I would say is Ashley Newman. She's our senior account manager, account executive. She's been with us for a real long time, another homegrown talent. And, she serves a lot of our top customers, on the commercial property and casualty side. So, yeah, we've been really lucky. We got a great team over there, and and it's continuing to grow, and we've got people kind of coming up right behind them.
You keep saying lucky.
I was just
keep saying
say
lucky,
that.
but I you should take. I mean, I'm going to give you some credit of like. I always
hard work brings luck.
In places I do business with, they treat their people well if they've got a lot of tenure, especially with their their main people. And I've been working with Kingsgate for
and people
quite a
work
time.
that hard for people they respect and that they're watching work that hard.
Ed, Denise, the leadership. There's obviously some great leadership there too.
Well, and you say the thing about luck too, and I think about that conference that you went to that was a jumping off point as you explained. You've got to take that chance, like, hey, I'm going to Orlando. We probably did some research on it. You're like, yeah, this is pretty interesting, but you've got to also make the commitment to go down to Orlando, go do that conference. Those are things that entrepreneurs, obviously time is our most valuable asset, right? So we try to make sure that we spend our time wisely, and you're like, okay, I think this might be worth it. I'm going to take a chance. I'm going to go down there. And then also when you're down there, you can't end up partying the whole time. You got to actually go to the conferences and listen and, spend time and actually learn some stuff. So, we've all been to those types of conferences, that are good. And then we've been to the bad ones, right? But you went to a good one and became a jumping off point. So you do talk about luck and things like that, but you also made some commitments and some sacrifices that I'm sure that nobody knows about.
Yeah, for sure. And also I'd say, you kind of, to your point, you kind of make your own luck a little bit. Mm-hmm. And I think going to a conference like that, getting to know a guy like Jordan Clark that later on becomes, someone that you can feel comfortable going to and asking for, hey, would you be willing to put your name behind mine to give us this other opportunity? And there was a few other guys from that trip too that I got to know. And it's good, like, you go to that conference and then maybe afterwards, you're going to the hotel bar and you might have a few beers with these guys. But in particular, if you're the younger guy, but you're inquisitive, and you're willing to ask some questions and learn from some of these guys that have been there and done it, they like talking about those things. I mean, if you kind of approach something with some humility, there's a lot of lessons to be learned from people that have been doing what you want to do, for a real long time. And I've been really fortunate with that as well. I've had a ton of people that have been a tremendous resource for me, including my dad, even though, I joke around sometimes with whether it's new carrier partnerships or, some people that we partner with in the insurance business, not necessarily clients, but, that hey, we're still figuring it out, right? I mean, this thing was founded by a farmer, and some knucklehead from you and I, right? And so there's still this process of figuring some stuff out. A lot of times people might, like, I was actually talking to a friend of mine who has a son that is looking to, is graduating, and trying to figure out what he's going to do. And, I would say probably when I came back and joined, it might not have been possible to do it this way. Maybe not. But, what I had recommended to him is I was like, don't have your kid come back right away. If I could go back and do it all over again, I think my dad would probably say the same. Let me grow up a little bit.
Get some experience.
He wouldn't have on Thanksgiving Day threw that contract in your face. He would have said, "Go figure it out yourself."
Yeah. I mean, I think there's a lot to be said about like getting some exposure, to some other things too, and so that way you might have some fresh ideas and like see how other people are doing stuff, versus like kind of jumping into it and figuring out. Because when you come and join an organization that's 2 people and a receptionist, there's not a formal training program, So
especially for mom and dad.
Yeah,
you don't want to listen to them.
So you gotta figure a lot of stuff out. But kind of like the point I made earlier is, the one thing I will take a little bit of pride in is I think myself and a lot of people on our team, by being around it, or heck, maybe we also are we just kind of naturally gravitate to people that have certain traits,
like-minded people.
I'd say we got a lot of people that are very resourceful. And I think what I think makes our business cook is that we we at our heart, like we're problem solvers, right? So I mean, I think that's the thing, is that in our line of business, it's one thing to sell an insurance contract, but it's another thing that when things pop up, how are you going to help solve problems? Whether that's in the aftermath of a loss, whether that's in a difficult market cycle, where premiums are shifting and carriers are non-renewing accounts and all these other things. How are you going to help navigate that and help solve problems for your customers? That's really, I think, what our line of business is about.
Is that why you guys have 161 Google reviews and they're all 5 stars?
Well,
because I need to know how this is happening.
We looked at it. She told us that before. And we're like, oh, that's impressive.
But honestly, I've had a little interaction with some of the customer service people on your team, and you guys, they're on it. They're responding, and it's such a relationship-driven industry. And I think, like you're saying, if you can problem solve for people and help them be more successful in your life, that customer service and problem solving, it's all going to correlate in that success and being around successful people.
This podcast is produced by Spin Market and Digital. Located in Fort Dodge, Iowa, Spin Market's highly skilled team can help you increase your market by updating your website, improving SEO, designing advertisements, and producing podcasts that will grab the attention of your market. Contact Spin Market today for all your digital marketing needs at digitalagent@spinmarket.com or call us at 515-302-8026. And to learn more, visit our website at www.spinmarket.com. That's digitalagent@spinmarket.com or 515-302-8026. Or visit our website at www.spinmarket.com.
Let's do a little dollars and cents.
Dollar bills, y'all.
All right, I don't have any, Bailey calls me the stat nerd. I don't have any stats today, but I did use our Googler and got some fun insurance facts out there. So the first, I don't know if they're fun. I don't know if you say fun. Interesting, yeah, is a better word. But this is as of 2020, so bear with this first line. Starbucks in 2020 said they paid more for employee health insurance benefits than they did for the actual material that goes into making their coffee.
So, a lot of employees.
Yeah, so you wonder why that coffee costs $5.
Yeah, $7. I think. I don't know if you can get a $5 coffee.
Oh, you can't anymore?
I don't know if you can at Starbucks, honestly.
When the girls hit the big 24 ounce, I'm like, dang, that's like $9.
And here's one other interesting. This was number 8 on this list. Gene Simmons once had his tongue insured for $1 million. So,
well, like, what's going to happen to the tongue?
I
don't know. In a car wreck or something like that, yeah.
It's kind of like, it was a staple. So
that was his moneymaker.
That's bite your tongue off or something. And then the last one, this is for, you movie theater goers still. There's an insurance policy that exists for death by excessive laughter at a movie theater.
Is that on your policy?
I guess.
Like for every movie theater or just one particular movie
Who
theater?
writes these up?
Lords of London of this one. So
yeah, that is it Lloyd's of London?
Lloyd's of London.
I've seen some
Lloyd's.
crazy, like some of these athlete policies come from Lloyd's of London. They do all the exotic
I'm
stuff.
sure that industry's changed big time with like the NIL stuff. I mean, some of these guys are probably more wanting more insurance policies on their bodies. And
I bet
stuff
Caitlin
now.
Clark's insured
so.
that hand.
I would
I
think
think
so.
most professional athletes, but even college, like more. I mean, there's a lot of value now, economic value of all this NIL stuff. So
you have
so
some
you
of
can
those
insure
policies?
anything, is what I'm hearing.
Don't have any of those. I have had the opportunity and still might look to do this at some point, but through one of our partnerships is we've got a connection with an outfit in London that has kind of direct access to the London markets, like Lloyd's. And it'd be fun to go over there and just kind of spend some time with them and just see how some of those things work, right? Hey, somebody comes in, like say Caitlin Clark in her senior year. Hey, we need to, get an insurance policy of $5 million in case she blows her knee out or something like that and hurts her draft stock or whatever it may be. And just kind of see how that process of negotiation works. I think it'd be pretty cool. If I could add to your dollars and cents there, Cole, a couple of insurance related statistics or whatnot on the health insurance side. Okay. So you're talking about Starbucks paying more for healthcare than they do for the raw materials for their coffee. It's interesting, like in healthcare, and I mean, I think we can all agree the system in the United States is maybe a little bit flawed. And,
a little bit, yes.
And there's, we always talk about the right care, at the right price at the right time. And so it's wild that like you can have, and I'll just give a personal experience. I'm not going to name names or anything, but my wife had to get an MRI. And so she goes and gets an MRI, and that cost of that MRI was around $2,300. Okay. So nothing's good or bad by comparison, right? So she goes and gets that MRI. The doctor reads it, comes back to her and says, hey, we'd like you to get a better quality image MRI. So they send her to a different place, and she goes and gets a better quality MRI for $600. So that doesn't make sense, right? So there's, we always talk about there's oftentimes an inverse relationship between the quality of care and the cost of care. And that's just a really small example of that.
That's
like,
wild.
Yeah.
We've had discussions with people that, we've had some cases actually where, someone maybe is going to need to go in and get a heart procedure done, and getting it done at, place A, might be $50,000, but at place B, who maybe does only that procedure and does it every day of the week. So higher quality scores. And there's a lot of data out there that supports like quality. Maybe it's 15,000. And so what's kind of fascinating is like, if you can save that kind of money in the plan, what's it matter about like deductibles and out of pockets to employees and stuff like that? Because that's not the cost containment measure. The first $3,000, $5,000, that's not it's the back end, when ultimately like, and the real reality is like, I mean, shouldn't the price be the price, for a certain procedure, right?
Very frustrating. And I think it's just so complex of the different layers of the government tied into it with, so many institutions, and it's doesn't seem like anyone's getting it right. I don't know, if anyone has a great solution, I'm sure it'll be, be pretty positive economically at some point, you would think.
And then I got one that I'd like to get your guys' thoughts on. As about a month ago, I was at a deal where they said in 2006, 35% of the premium, and when I say premium, I'm talking about like property and casualty premium. 35% of the premium was controlled by the top 100 brokers in the United States. Today, it's 75%.
Wow.
So,
wow.
I guess I'd like to ask you guys, like when you hear a number like that, what's the first thing you think?
But I think a monopoly.
Yeah,
Yes.
yeah. Well, I compared it to like Cargill in the meat market. With pigs and cattle, they really control. Or there's a few producers.
Control. You can see who's controlling
that control
what's
the
going
price,
on.
and obviously if some of those top carriers are not doing as well financially, like and not done a good job with what we've seen with the weather, the predictability of the weather, I'm sure. So yeah, that's scary. Actually, more and kind of frustrating, but you also realize like, oh, that's probably why my costs are going up 10, 15, 20%.
Yeah. So this is like the people like us, like brokers that are going to different insurance companies.
Oh, okay.
Yeah.
I got you. Yeah.
And so, but to that point, which that's another catchphrase I use at work. So if the staff is watching this, they might be keeping.
They're going to give you a hard time. I'm sure
they're going to give me a hard time. But I think, do you guys remember Elliot Spitzer? Do you remember, he was the Attorney General of New York a while back.
Yeah.
He brought some class action lawsuits against some of the big brokerage houses like Marsh McLennan and AJ Gallagher and some of these others. I think Aon was in the mix there, because they were price fixing. So like what they were doing is they were kind of working with each other, to say like, hey, we're going to go after customer X, we're going to renew it at this. Can you give them a number, of this and this? So then that way we'll keep it. And then we'll do the same for you. So there was this kind of collusion between these people at the top of the food chain. When I heard that, naturally, like, my inclination is like, I think that's a tremendous opportunity for businesses like ours, because those big firms, I mean, they've been going downstream and acquiring agencies like ours, some even smaller, and folding them up into their organizations, and then obviously, there's always talk, hey, you're going to run this, independently, and you're going to maintain autonomy and stuff. But the reality is they've got either private equity investors that they've got to satisfy and continue to, move earnings up, or they've got, stockholders that they got to make sure that they're making happy. So there's going to be objectives there, that have to be met. And I think there's a great opportunity for firms like ours to, maybe be, I kind of like talking about being the anti-BUCA on the healthcare side, but, kind of saying, hey, we're not necessarily going to, succumb to this and be a part of this. We're going to sit on the outside and we're going to be maybe an independent voice.
I appreciate
that ultimately, like, hey, when you come to us, you're going to be an important part of our relationship versus this, speck of sand on a beach, of this huge organization.
Do you think, again, don't know near as much about the insurance industry as you, but in my eyes, it seems like the smaller you are, it's going to get tougher and tougher to be in the business. Like for similar agencies like yourself, because of those large carriers
eating everyone up.
Or the carriers that are feeding into those brokerage houses, they want a volume of business, or the risk profiles kind of changing across the country with the weather. Like, how would you feel that? Like, say someone wanting to start an insurance brokerage or insurance agency, it's almost impossible unless you buy a book of business, right?
Yeah, I would say like what my dad did in 1990 it could never happen today, just because the insurance carrier of any type is not going to contract with a guy that doesn't have something that you can already say I can bring to you.
I'm going to write this amount of business, right? Yep.
Correct. So I think, the point of entry is, going to be much steeper, right? For anybody to try and do that. But also, for us, I mean, we continue to have to produce with carriers to maintain that relationship. Now, part of what we do to insulate ourselves a little bit from that, and I'd mentioned them before, but is that partnership with Keystone Insurers Group, which is, an aggregator that's, really across now almost the entire country. But it gives us the ability to kind of like, negotiate with our collective strength and give us the ability to probably maintain a lot of contracts that otherwise, maybe we wouldn't be able to do independently. And I think at the end of the day, that serves our customers pretty good, because I mean, that's really, like in times like this where there is a lot of, upward premium pressure and there's, carriers exiting the space. I mean, just in the last year, IMT Insurance, I'm pretty sure you've heard that name. They're based here in Iowa. They've put moratoriums on business. They've kind of changed their underwriting appetite. Pekin, another small regional based out of Illinois, they exited Iowa, and home and auto insurance. Secura did the same. And then others, they haven't necessarily put moratoriums on business, but they've maybe made the process of like getting a proposal or issuing a policy so cumbersome that they're pretty much not open for business, right?
Let's take it back to the basics of hey, I'm coming, my home and auto insurance is up 25%. Why is that? Just give us that like a broad-based answer on that, or educate someone that does, is not super in tune with the insurance industry.
Yeah, I think there's several factors that played a role in that. Part of it, I think, is the industry's own doing, and let's just use convective storms. And when I say that, I'm talking like tornadoes, hail, high winds, that sort of deal. Convective storm activity obviously has ticked up. I don't think anybody will argue that. I also think that we have a lot more, property than we used to, right? So like a tornado that goes through like Western Waukee 20 years ago is just going through a cornfield. Now it's maybe $1 billion in damage, right? That's probably excessive, but it's a big storm, right? And so what happened obviously is when, And we had a couple of things that just were, kind of a perfect storm, no pun intended there. But, in 2020, 2021, we had convective storm.
The derecho
was a huge event. We obviously have had hurricane issues, down in the Southeast. And then all of a sudden, the cost to repair skyrocketed. I can think back to, we had a claim, and if he's listening, he'll know who he is, but we had a claim around Mother's Day of 2021. And, we had a situation set up where we felt like we had really like adequate limits for what they had there for property insurance. And it was a partial loss, but we pretty much exhausted the entire bucket of money that they had to do the claim just to get them back to whole. And it was kind of touch and go there for a while, like, holy cow, because in the spring of 21 was like that perfect time that drywall,
lumber, everything shot through lumber was an all-time high.
And I could be off on my facts here, but I was thinking the GC was saying like a sheet of plywood was like $12 or something when it used to be. Crazy. So it was just nuts. So all those things started happening and carriers were getting hammered. And then what happens with it too is like they historically maybe had an attachment point on their reinsurance of, let's just say hypothetically, $1 million. So anything over $1 million, reinsurance is coming in. Well, all that hit the reinsurance market in those years. And then all of a sudden that drove costs up for reinsurance and they pushed the attachment points higher. And so everything kind of trailed a little bit. And then now insurance companies are saying, hey, we got all this, we got way more exposure, our costs, because at the end of the day, they're just a pass through, right? Yep. And so they're passing like their costs to insure that risk to the consumer. Well, when all those costs exploded, it naturally went back to the consumer. Now, the one thing that I think is the industry's own doing is for years, let's just use like your home as an example, you could have a 30-year-old roof, right? And you've expended its life to the last possible minute.
That'd be me. I'd do that.
And then hail comes through and, beats
new roof. Yes.
Brand new roof, like no depreciation, no holdback or anything like that. When you have, completely sucked the life out of that roof, that's probably not a good way of settling claims if you want to control costs, right? Yeah. So I think, and the industry has shifted now, like where they're putting in some provisions that are going to say, hey, once it exceeds a certain age of life, we're going to maybe carve back a certain percentage. It's never a straight, like if it's a 30-year shingle, it's not like 10 years, hey, we're going to depreciate a third. It's less than that. But I think having a little bit more common sense approach maybe to settling claims over time can maybe begin to reverse course here. Now, Milton, we were talking about earlier, and Helene just happening. Mm-hmm. Those types of events, even though they're far away from us, they still impact the reinsurance market. And I don't think anybody foresaw what happened in Asheville and parts of Western North Carolina.
It's unbelievable.
So it's a very complex industry. Like insurance is just overwhelming. Like just listening to you talk, there's so much stuff changing. There's so much things for you to keep up on. So to a listener, a business owner, an individual, what are important factors to consider when choosing an insurance company? Like even if you want to pitch yourself, because obviously you're very passionate about your company, like what, because I feel like that's also something like they don't know the consumers have the power to shop and they don't have to go to just anyone. They can go to someone like Kingsgate. So what would you tell them when looking for an insurance company, what to look for?
Well, I think, first and foremost, you got to find, a professional that you can trust, right? That, obviously is going to be candid with you. Because like right now we're going through a difficult market cycle. And so I think the biggest thing is like honesty and also, and transparency, and also, trying to be as punctual as possible of like delivering terms and things of that. What frustrates me sometimes is, I think by design in our industry, oftentimes people will delay providing, renewal terms and things like that for the sole purpose of maybe trying to feel like they can corner a customer into making a decision. When the reality is like, I think you just want to empower the customer to like be aware of what's going on, because then it also gives you time to say, hey, I think these terms are fair, in this market cycle. What we've been seeing is this, and this is actually below that trend. And you've got a long-standing relationship with them, and say this company's slow to non-renew accounts, even if you do have some claim activity and whatnot, I think it would be in your best interest to maintain that relationship. So I think you got to trust the insurance professional. You got to have them kind of explain, like, there's certain things that we just fundamentally believe in, when it comes to like, one thing I always tell our staff and I tell customers too is like, hey, when you're paying the premium, you got an insurance policy. When something bad happens, you got an insurance contract. So our job is to try and stack that contract as in favor of you as possible. Now, certainly you have autonomy and like the ability to say, hey, I don't want to pay for this or pay for that. But as long as you understand what you're giving up, and that's the other thing that I often say is managing the gap between expectation and reality. So if your expectations are up here, but the reality of the contract that I sold you is down here and something happens in that gap, we're going to have a problem, right? So I always want to manage that gap between those two things and just say, hey, that way we're aligned. You can make a choice as an insurance purchaser, but I want you to understand what the risk is that you're saying, well, if I'm going to forego that. So I just think people that are honest, candid and, pretty transparent as it relates to, what it is that you're selling. I think that's what you got to find. And if you find somebody that you know and trust and they've done a good job for you, then I wouldn't recommend you going somewhere else.
So that's you guys, right?
Well said.
Yeah, 100%.
That was very well said. I appreciate that answer, but I can also tell you have customers that trust you, but you also have employees that trust you. You were telling us a little story earlier about how all your employees wore a shirt to your Christmas party that know your catchphrases that you say at work all the time.
Some of them were on this podcast.
How many do you think you said on the podcast today is my question.
Oh, man, I bet you I got a dozen in there, probably.
What's your favorite one? Tell the listeners. If you hear him, you're going to know he says this.
I probably, I would say probably the most frequent one is at the end of the day. It would follow closely to that point. And then also, my son would say when I go 100%, like when I'm trying
I do that too. I do that
100%. That's one of my good.
Yeah.
He also said, do we have the bandwidth to take on this? I like that one.
That's another one too.
His employees all wore T-shirts with all his catchphrases. So that shows that your employees, they're listening to you, but they also hear your voice a lot, right? You're in front of them, talking them through things, so that it's a family-owned business that also obviously you're very involved.
It's a family culture at work. So
awesome. To one of the things I was talking about earlier, if you're willing to listen and maybe pick up some tips from people that have done it and maybe done it better than you. I got a customer who's got a much more successful business than I have. And he made the comment to me one day that, he refers to himself as the chief repeating officer because he's basically, kind of been relegated to just hammering home like the core tenets of the message within his organization, that's become his primary job. And that kind of stuck with me because he's right. If you got certain objectives or a certain way that you want to do business, like I talked about, some of those things that we fundamentally believe in, if you're not talking about it all the time, it's going to eventually fade from memory. And so I think that's an important part of, trying to lead an organization and, making sure that like what you're doing is consistently delivered. I think each and every day, certainly we make mistakes, right? Everybody does. But if you're willing to quickly learn from them and then try and remedy the situation, that's another story here recently. I had a customer tell me that he parted ways with another professional services firm. And it's because they had made I would say a fairly significant mistake, but didn't bother to really explain why it happened, kind of provide insight into, why it transpired that way. And then maybe what they were doing to correct it, and never even said sorry, and that kind of blew me away too, because coincidentally that customer, I remember one time we made a mistake that generated a surprise invoice for him. And, it's
always fun to get.
Oh man. And and it's a guy we both know. I drove down there that day and,
that's when it's bad. You're getting the invoice and you're delivering it down to.
So I went down there and I explained exactly what happened. It was kind of a unique situation, still certainly not something I was making an excuse for, but, explained to him what we did to try to, to ensure that we didn't have it happen before. But then flat out just told him hey, look, I'm really sorry. And we own it. And even provided a solution, where we would, take a little skin in the game on the deal and, which he didn't accept, but he was like, hey, appreciate it, and moved on and never had an issue since. So
I think that builds a trust factor though. As long as you can say, right? I messed up, I'll make it right, or I'll do what I can do. That's what people want to hear.
For sure.
All right. At the end of the day, guys, just wanted you to know, George Brett, a former Major League Baseball player.
To that point,
this was his quote. I could have continued to play baseball, but it would have meant doing so for financial gain. And the baseball deserves better than that. George Brett.
Go Cubs.
You've been listening to How to Money with Cole & Cole, the podcast of Full Swing Financial Planning. To learn more, visit their website at www.fullswingfinancial.com and follow them on Facebook and LinkedIn.
For now, I'm Cole.
I'm Bailey.
And I'm Cole.
And we'll see you on the greens. 4.
Security and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC.